Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to the Wednesday, the 1st of October, first day of the fourth quarter, the final quarter of the year. Welcome to the Bull versus Bear webinar to all the Trade Day team. This is Steve Miley on the call for Trade Day. I'm going to go for our usual run through in here today. One thing dominating markets in here is the government shutdown. Talk a little bit about that. There's hundreds of articles. I'll share some stuff with you. There's no massive insights from my side. I've seen this before. It gets resolved. Market goes to risk off. Stocks are off, gold's up, bonds up, and then in 2-3 days' time it'll reverse. We've got to obviously watch out for comments along the way. If there's any breakthroughs, going to be positive stocks. If there's delays, going to be negative for stocks. In some ways, though, we've got this, and I'll talk about this a little bit more as we go through. But as before, we had last week, so good GDP data, positive economy data, negative for stocks because potentially the Fed are going to be less dovish, less accommodating, less likely to cut rates, de facto more hawkish. Kind of the opposite's true in here. So this is negative for the economy. Government shutdown, potentially workers not earning as much, cutting in salaries. There's no way you can dress it up. A government shutdown is not positive for the economy, right? And causes indecision, uncertainty, and but then that means then the Fed, and we'll come to this shortly. We'll look at the interest rate markets. Fed's less likely to cut rates. More likely to cut rates, which is then in turn positive for stocks. So we'll talk a bit about that as we go forward. Looking at today, key in here, we've already had out of Asia and Europe. It's the first day of the month we get the global from HCOB/S&P Global. We get the manufacturing PMI data. So you can see we've already had that you can see the European data in here. National holiday in China, so I think we're going to be a day back on those data. But in Europe, we can see in here the French and German data beating expectations. Also the Eurozone as a whole, and the UK data bang in line with expectations. So France, Germany, Europe beat, UK dead in line. We've also had European-wide EU core CPI data and headline data you can see in here, also in black, all dead in line with expectations. So going into today, we're going to have them focus initially in 42 minutes time on the ADP non-farm employment change. Remember, that's the private payroll number. It's not the official number. The official number comes first Friday of the month, which is this Friday. We get the official US employment report, but this is like a precursor, a private payroll number that can give us a guide to what we're kind of going to expect from Friday. This, when it first came out, it was about a decade ago, this number first started printing. It used to really move markets. These days, not so much. So that comes out now in 41 minutes time. Then we get the S&P Global Manufacturing PMI. So this is the one that, we see all the global data in here. So S&P Global gather this data for global economies. Okay, so that is an important piece of data. However, it's kind of superseded by the fact that with the longer stream of data we have is from the ISM data, which is for the actual US, the Institute of Supply Management. So as far as I'm aware, kind of the S&P, this ISM data was being collated prior, and then S&P Global actually used to be another company whose name completely escapes me now, that started gathering this data. This data was bought by this data stream was bought by S&P Global more in the last few years. So this is, although the global data is more important, when it comes to the US, the ISM data supersedes more important. So we do get So just to recapping here, ADP non-farm employment in 40 minutes. Then at 9:45, the S&P Global data, which is less important. Then in 15 minutes after that, at 10 o'clock Eastern, we get the ISM manufacturing data. So a busy hour or so in here with the ADP non-farm, the S&P Global, and then the ISM PMI data points. So we're watching out for all of those. Plus then, and just one thing I wanted to mention in here, you see in here on our banner up here, Influencer Club launches today. So we have paired up with some influencer traders, affiliates in here to run this Influencer Cup. I can put this into the chat, so you guys can take a look if you want. So I'm just posting that in the chat now. You guys want to take a look at that. So the Influencer Cup in here. So basically various influencers going head to head in here. Just launches today, so you can see they're all in the same. But we've got, I think it's 19 now. So 19 different influencers all going head to head. We'll show you the rules on that. We'll give a link to the rules. But basically, they're trying to pass evaluations and then get to the funded stage and then make money when they are funded. So that's launched today, and you can follow them. And this is the exciting thing for you guys. $10,000 in cash prizes, and also millions of dollars in free accounts and giveaways. So we are running that, providing that cash prize and the millions of dollars in giveaways. The cash prize is not, excuse me, not just for the influence in here; it's for for their followers. So if you follow whoever ends up winning this, and you follow those guys, and then you got potential to win a cash prize as well. So cash prizes and millions of dollars in accounts up for grabs on giveaways, and the various influencers, affiliates will get more giveaways depending the better they do on this leaderboard. So that'll be updating at end of day. It will update at 6 a.m. Central Time by 6 a.m. But we'll get the it's going to be done from each night, so the data that we get from the night before. So let's turn to the main feature of the day near the morning briefing. America's in here from Bloomberg. U.S. government shuts down with no sign of resolution. So the talks failed between government and the Democrats, so all the headlines here, and I've got about hundreds of headlines on this. So effectively, stocks have dipped lower. Stocks rallied yesterday, even though we knew we were going into the shutdown. So they were up at or near new all-time highs. I think Dow Jones hit a new all-time high yesterday. S&P, Nasdaq were close back up to their all-time highs. And we're basically given back the kind of gains this morning that we made yesterday, the slight gains that were made yesterday. As I said before, I've seen this. I think it does. Where is it? First shutdown is 7 years, and the third under President Trump. So it's not. This is new, and it's not just Trump. It predates Trump. It's been going on for decades. It goes down to the wire. Usually, it goes right to the wire. Deal is made, and then the spending is increased, and the government doesn't need to shut down. This time that hasn't happened, but usually it's resolved within a few days. And so we look for that to potentially happen in here. So markets are stock indices are down. Gold is up as a safe haven, and another new all-time high. And bond markets are moving higher in price, lower in yields. Again, it's being sought as a safe haven. And that's pretty much across the board. We've got and this is taken up this whole, and I would take a look at this if you can. I will share this one. I don't know how many of you have got. We have a license here to be able to view all of these with Bloomberg. It's not expensive if you want to sign up with Bloomberg. But in here, if you look at the bottom in here, it talks you down what are the effects, just running down through the effects of a government shutdown there in this article. And then I'll share some more that I think are interesting. So look, same from Reuters, morning big, Congress leaves DC and markets in the dark. Trump and Democrats grapple for edge in government shutdown. US begins government shutdown with Trump, Democrats at impasse. US stock futures fall as government shutdown clouds interest rate view. Stocks fall as US shutdown fuels gold rally. We've mentioned that. Gold hits record high in US government shutdown. Rate cut bets. So we're expecting more rate cuts, softer dollar. Softer dollar also bullish for gold. Bond traders boost bets on 10-year rally as well. So it's another safe haven. US Treasury bonds going higher. I'm going to share this again if you can see this. So here's what happens when the US government shuts down. So that's the actual, but this I think is going to be probably better. Traders guide to markets as US government shuts down. So giving you insight into what should do what, and we've already mentioned what should kind of happen. Stocks down, risk off event. If we look on the global markets in here, Nikkei down 0.8, but the Hang Seng that's from the day before because the Hang Seng closed. I think because of the China holiday, but European bourses maybe a bit of asset reallocation out of US into Europe, because European exchanges are actually up between 0.5% and 0.75% in here this morning across the UK FTSE, German DAX, and French CAC. So maybe a little bit of asset reallocation. And you can see yesterday we were up like, these are the cash indices changes from yesterday, up 2/10, 3/10, 4/10 across the Dow, Nasdaq, and S&P, and we're kind of giving that back in a bit more in here, down about 0.5% this morning, between 5 and 6 tenths between the S&P and the Nasdaq, so giving a little bit more than we gained yesterday. So it's hardly a collapse in here. I think this is the most interesting thing in here is that interest rate markets are responded by, obviously, as I said earlier, the risk is then this is going to be negative for the economy. The longer the shutdown goes on in here, potentially furloughed workers, not getting paid, reducing consumer spending. Where it's a huge part of the US economy is the government sector. So, so what we've seen is this has actually risen. So this is the chances of a rate cut, which is pretty much sitting above 90% anyway for October. This has got up to nearly 95%. But this is the more interesting one for the year end. Remember, had dipped down to the low 60s at the end of last week and through last week, and now back up at 78% at the end of the year. So the market pricing in potentially another second rate cut, more likely of a second rate cut. And this movement is pretty much brim because we've gone into that potential shutdown scenario. So the risk is that we do get in here, we do get a more dovish Fed because of the potential shutdown in here. And that is then, and then what we're seeing in here is bond yields going lower as well. So this is the 10-year. Let me just pop this out. So you can see in here bond yields just trading lower over the last few days in here. So that's bond prices going up, yields going lower. And if I go to here, we see on our analysis, we see like bond prices going back up in here. We remain bearish overall, though the general outlook is negative right the way across the yield curve. From 30s, 10s, 5s, and 2s, all kind of still negative. You can see in here the 2-year particularly doing well, and that's because of that's the short end, because there's more likely the Fed's going to react with becoming more dovish, maybe a more aggressive interest rate cuts into the end of the year than previously expected. So 2-year note particularly doing well, but we're still overall bearish in here, looking for lower prices, higher yields. And there's the analysis as of last night. Markets had rebounded, looking firm for the start of this week. However, dipping back lower today, but still overall underlying thing for me is bullish. So we're going to be having to be watching, eyes in two places today. All of this data we've got coming through. So 32 minutes ADP, then 9:45 S&P Global PMI, and then the 15 minutes later, 10 o'clock. These are all Eastern time. We've got the ISM manufacturing employment, so we'll keep an eye on that. Plus anything coming out from anything coming out regarding the shutdown, right? From either the Republicans, the Democrats, from Trump, Vance, whoever it might be. So keeping an eye on that as well. Keeping that at the Live School, Live School service, guys. Make sure you're tuned into that, and you get updates there. All right, guys, I'm going to wish you all a great trading day. Take care, stay safe. We'll be back with you with another Bull versus Bear webinar tomorrow. Bye.